Hello and welcome. You're watching Business Today. I'm Akshita Nandagopal. Over the next 30 minutes, I'll be rounding up all the top business stories of the day. Let's begin with the top news. Big fallout of the Adani Hindenburg saga. Centre agrees to Supreme Court suggestion for an expert committee to review regulatory framework. Apex Court to list out committee members on Wednesday. Next hearing on the matters on Friday. Massive selling pressure on Adani counters again. All 10 group stocks in the red. Reports say capital markets regulator SEBI will brief the finance minister about its investigations into Adani Group activities on Wednesday. Air-Vistara lays out its ambitious plans in an exclusive conversation with Business Today TV. Integration with Air India to be completed in a few months, set to expand global network while expanding its fleet to 70 aircraft in the next 1 year. Food prices again drive up consumer inflation in January. India's headline retail inflation accelerates to 6.52%. versus 5.72% in December. It's about the RBI tolerance band once again. Have the 6 repo rate hikes in 9 months failed to actually tame inflation? Muted start to the week on Dalal Street. Investors eye US retail inflation data while the ongoing uncertainty and spillover impact from Adani stocks continues to dampen sentiment. Both Nifty and Sensex close with cuts of nearly 0.5%. And Renault-Nissan make yet another attempt at cracking the passenger vehicle market with the launch of 6 new vehicles. The auto major commits to 5,300 investment of 5,300 crore rupees to aid new projects in the Indian market. India's premier airline Vistara is looking to expand its fleet to 70 aircraft by 2024. They also plan to fly more international destinations and domestic routes after the integration with Air India in the coming months. Business Today TV's Karishma Asudani speaks with Vinod Kannan, the Chief Executive Officer of Vistara.
Hello and welcome to Business Today Television. I'm Karishma Asudani and joining me today is the Chief Executive Officer of Vistara, Mr. Vinod Kannan. Thank you, sir, for joining us on this chat on Business Today show. I'd like to ask you, to begin by asking you, how has the year been like in terms of your sales and bookings?
Firstly, thank you very much and great to meet you. I think if you're talking about 2022 for us, it's been a phenomenal year. I think you must have read as well from various reportages that aviation has kind of come back after the dulls of the last 2 years, 2020 and 21. So we are no different. I think we had a wonderful year in 2022, especially the second half. If you recall the first half in Jan-Feb, about 1 year ago, we still had the third wave with Omicron and everything else, where things slowed down. But I think from the start of this financial year, which is April, we've had a very, very positive response. For us, our load factors, which is our occupancy, has grown. Our sales, of course, revenue has grown. And since July, we've been the #2 airline domestically in terms of market share. So obviously very promising and a great year for us.
Great. And like you mentioned, of course, the numbers are talking about you. Q3 has been profitable for you. What are your views on the upcoming quarter? And also, do you see the pre-pandemic numbers to have been overtaken?
So let me talk about the numbers first. For the industry, I think we are just slightly short of pre-pandemic numbers in terms of domestic traffic. But for Vistara, we are way ahead. So just to give you context, we used to operate about 200 flights a day pre-pandemic. We are now hitting about 275. So that's about 30 to 40% more than what we used to do. And therefore, our passenger numbers are also much higher compared to pre-pandemic. So yes, for us, the answer is yes. And I think for the industry, we are getting there as well. We are just a little bit short, single digits. And I think this summer, hopefully, which is April to June, which will be the next peak, we will be definitely able to move ahead of that number. The key thing for us looking ahead for this quarter, demand still remains strong. I think we've seen people are still willing to fly and spend. It's also thanks to various things that are happening in the country. For example, G20, which is for us, for an airline like us, that's an important event because there are people flying around for those conferences. We've also seen leisure traffic still holding strong. Weddings are still going on. And for us, we've actually indexed and grown quite a bit on international. So we now connect almost 15 points internationally. We've just announced Mauritius recently from Bombay. So that has been a good engine of growth for us, and international traffic is still doing very well.
Great. You did talk about the international expansion, and that is my next question. In the years to come, how many destinations are you targeting? And also, I think you're looking at Hong Kong also as one of the destinations.
Yes, so we did operate during the pandemic. I mean, as much as we all had a fair share of battles during the pandemic, we did grow through the pandemic as an airline. In fact, we took delivery of aircraft even through the pandemic, and we did fly to some destinations such as Tokyo. We flew to Hong Kong, Incheon, which is Seoul. So these were all charters that we used to operate at that time under the bubble agreement, and therefore these are all points that we will review again once we have the aircraft. Now, at this point in time, we fly to 31 domestic destinations, and as I said, we've announced or we've started operations to 15 international ones. As to how many more we are looking at, that's still that's work in progress. But to give you an indication, our fleet size, which is the number of aircraft we have, today sits at 53, and we will go up to about 70 by 2024. So we still have about 17 aircraft to come in, and those will be the engines of growth.
Great. And what is the expected timeline delivery of these aircrafts to come in?
This will happen from now, where we sit, to the end of 2024. So in the next, I would say, 12 to 18 months, I would get delivery of these 17 aircraft. There will be some aircraft leaving the fleet as well, some of the older aircraft that are going back to lessors. So the net increase, or the total increase overall, will be these 17.
Okay, and is this also one of the reasons why you're awaiting to start flights to the United States of America? That has been on your plan for a while.
Yes, it has, but it is also a function of aircraft deliveries. The 787, which is the wide-body aircraft, the Dreamliner, we've ordered 6 of them, but only 2 of them have been delivered to us. We've actually taken one more on lease, which is like a short-term lease, which we wanted to do because the 787 deliveries were delayed. So we still have 4 more coming. It's a function of when we get them. It's also a function of how we can use them. It may be to Europe, it may be to US, but at this point in time, we are very happy with our Europe operations.
Great. Let me ask the big question that is in the room, and this is of course on the integration and collaboration of Air India and Vistara. What's the update? What is the future going to look like?
I think it's still a little bit early to say. I'm sure you know that in November the shareholders have made an announcement that there's going to be a merger or an integration. So the plans are underway. Of course, there are multiple streams or multiple things that have to be taken up. There's the approval that's required from various authorities, so that process has kick-started, whether it's the Competition Commission or whether it's from other competitive regimes. So that will be one. And then, of course, there's the entire process of organizational management and bringing the teams together. So as much as we don't have competition approval at this time, we can't talk about commercials, we can't talk about sensitive information. But there are discussions, which I'm sure you've also seen in the press, about what the thought process is about integration. We believe that it will be a process where we will be very transparent. I've been informing or talking to my staff on a regular basis as well on what's happening. But it's going to take a few months before we see any fruition to this, because it's something that's just started off.
Great. I'm not getting into the details, but once upon a time you did see Air India as a competition, but now it's going to be more of a collaboration. Am I right?
It is still competition till we get approval from the authorities. We still fly on a lot of routes, parallel routes. We fly on international routes as well with them, and we compete with them. I mean, we cannot and should not be sitting down and doing this collaboration at this time until there is approval from the authorities. But yes, once that happens, we will have to sit down and see what we can do in an integrated entity.
But what could change for a consumer, for an Indian consumer, after this merger, if and when it happens?
The biggest, I mean, if you look at Indian aviation and you look at the order of aircraft, you look at number of aircraft coming in, whether it's from Air India, whether it's from even Vistara, as I spoke about, or even the low-cost carriers, there is going to be a much bigger, pot or a much bigger pie, because the expectation from the various, think tanks is that there could be 1,000+ aircraft delivered over the next 5 to 10 years. So to the consumer, there's going to be more choice, regardless of whether it's one entity or two, at least from this side of the house. There's going to be more options. You know that there are new airlines coming up. Akasa is also growing. There's potentially Jet that's coming up, and then Indigo and the others are here also ordering planes. So I think as far as the customer is concerned, there is going to be more choice. There's going to be more options, and from our perspective, I think we, as I believe the Air India side has also said, we want to, assuming there's an integration, set up a quality airline which is world-renowned and which will also make Indians proud.
Markets continue to be directionless amid uncertainty. Bourses close in the red as Street continues to eye key inflation data from the US. It was red across the street today, with the benchmarks closing lower, albeit off the day's low. Nifty ends the session below 17,800 levels amid selling pressure seen in IT and financials today. The Sensex too closed with a 250-point cut to settle above 60,400 levels. Meanwhile, it was the broader markets that were the clear underperformers of the day. Let's take a look at the top laggards in trade today. Cuts of 5 to 6% on the Adani names, Adani Enterprises and Ports, that were the top losers of the Nifty today, followed by names like SBI, Infosys and Apollo Hospitals, all closing with cuts of nearly 2 to 3%. But we did have some stocks bucking the trend. Titan, L&T, NTPC, Bajaj Auto and Eicher Motors traded in the green, all gains upwards of 1%. So the entire Adani pack was in red today, leading to investors losing more than 50,000 crore rupees. The flagship Adani Enterprises was down 7% in trade after touching a low of 1,662 rupees. At least 6 of the 10 group stocks hit the lower circuit. These included Power, Green Energy, Transmission, Total Gas, Wilmar and NDTV. The cement counters were also down, with Ambuja Cements falling more than 5% and ACC down 3%. The group has lost 10,24,000 crores in market capitalization since the Hindenburg report was released. Not just that, reports also suggest that the ports to power conglomerate will now aim for a revenue growth of 15 to 20% over the next fiscal. Capital markets regulator SEBI is all set to brief Finance Minister Nirmala Sitharaman on its Adani Group probe this week. According to reports, SEBI board will brief the Finance Minister on Wednesday on its probe on 3 broad fronts. First, the withdrawal of 20,000 crore rupees Adani Enterprises FPO. Second, on the surveillance measures into the rout in Adani Group shares. And third, an update on investigations into offshore fund flows into the Adani Group is also possible. The 6 repo rate hikes in the past 9 months have seemed to have a little impact on creditor offtake. According to the country's largest bank, SBI, rising rates have not lessened demand for loans. This is what SBI's Praveen Raghavendra had to say on the sidelines of the UP Global Investors Summit.
So the RBI had recently hiked rates. So do you think the people who are coming for home loans will be having more expensive loans? So any other way that the consumers can probably get some relief?
No, see, rate hike is, I think, the global phenomena. I would say that the rates are going up, and but I have seen that the demand is also there. And if you look at the consumption rate in the country, it's very high. So people are also going for home loans, and I would suggest that people should go for Prime Minister Awas Yojana, where you get subsidy also. So in the middle class person or a lower middle class, they can always have a Prime Minister Awas Yojana, where the subsidy and the subsidized rate of interest will be available. So I don't see any challenge going forward. The economy is booming, and even if the rates are going up, the people will be spending money in the coming days.
But don't you think some inflation issues would be arising due to rate hikes?
We have seen in the recent monetary policy that it is now inching towards the lower strata, and whatever has been projected, based on that, the economy should grow.
You mean to say the demand is good, so yeah, ultimately people will end up spending?
Yeah, the spending will be there.
Last question, sir. The budget focused majorly on banks lending and supporting profit. In fact, if I come to the numbers, SBI reported 15,000 crore profit, and excellent numbers for Q3, sir. What do you attribute this to?
No, like I told you earlier that we are growing in all the business units, and the retail growth is around 18 to 20%. In MSME also we have grown somewhere around 15 to 16%. Agriculture also we have seen a traction of more than 11%. So in all verticals we are growing, and the credit cost is very low. So the NPA is very much under control, the stress is under control. So we see that we'll be going further in the quarter 4, which gives the maximum growth we have seen in any financial year.
After declining steadily for 3 months, the consumer inflation has shot to a 3-month high in January. Data released this evening shows the CPI jumping to 6.52% in January from a very moderate 5.72% in December. This means that after staying in the RBI comfort level for 2 months, the headline inflation figure is again above the target limit. The inflation in January was driven primarily by food prices, which rose 5.94% against 4.19% in December. The latest inflation figures are also a big challenge for the central bank, which has been trying to tame prices by hiking repo rates 6 times in the last 9 months alone. With inflation falling the last 3 months, analysts were hoping that rate hikes will stop. Business Today's managing editor Siddharth Zarabi caught up with Madan Sabnavis, economist at CARE Ratings, to understand the inflation print and what lies ahead. Here's a slice from that conversation.
Today, when we are saying that inflation has gone up and food inflation is something which was trending downwards, which has reversed, I would tend to believe that this is mainly on account of the fact that we have seen rural inflation going up. That is, if you keep aside the core number, the core or the non-food, non-fuel inflation numbers, those would also tend to be high. And as regular consumers of products, we have also noticed that in the marketplace, we have been paying higher for a lot of these food commodities, including milk. That's also another thing which has been increasing almost every 2 or 3 months. So I think the cumulative effect is something which we are seeing in terms of this inflation number coming back to the over 6% mark, 6.5% mark for the month of January.
Core inflation, which although it excludes food and fuel, what is the impact going to be as far as core inflation is concerned, Madan?
See, if you look at core inflation, most of the core inflation comes in manufacturing and services. So what happens here is that when you have higher raw material costs or your input costs, that is something which companies have been saying continuously in their investor presentation, the investor calls, that they're in the process of passing on these higher raw material or input costs to the consumer. So that's what we are seeing when you see that inflation for things like health, for education, consumer products, personal care products. Now, these have been remaining fairly rigidly in the 6+ region for quite some time, and I think that's what, even entertainment for the matter. So I think these higher input costs are getting reflected, and I don't think these prices will ever come down, because this is based on the MRP concept. When I say MRP, it's a maximum retail price. So once the higher the input costs get translated into a higher retail price, the prices remain where they are. And even in case there is correction in the input costs, we will not see these prices coming down. So therefore, it tends to be a bit more rigid than food prices, which could come down in case supply conditions improve.
How is this likely to impact domestic demand? Do you see the revival happening, or what kind of impact do you really see with this kind of inflation number, especially in the rural context?
No, I think this will definitely affect consumption going ahead, because we have seen the pent-up demand phenomenon in 22-23, which actually defied logic, because when the prices go up, ideally your demand should be coming down. But I think the pent-up demand phenomenon did help to keep demand elevated, and that's one of the reasons why we saw consumption being good, and that's why even your GST collections were good for the government of India. But today we're looking at a situation where it is going to start affecting your purchasing power, people had compromised on their savings last year. Probably that may not happen at this particular point of time. And I think at a margin, we will be seeing consumption getting affected if inflation remains where it is. Of course, the RBI is talking of numbers coming down to the 5–5.5% range next year. But that also is quite high by our own standards, because we have had inflation closer to the area of 4% before COVID times. So I think consumption would definitely be getting hit. And that's probably one of the reasons as to why we are looking at even the GDP growth rate for 23-24 being lower than that for 22-23.
What does this number mean for RBI decision making going forward? This is just 1 month and we saw the most recent action, but what kind of impact would this reading have as far as RBI is concerned?
No, I think as far as the RBI is concerned, I think this number, as I said in the beginning, it vindicates the projections it's made not just for this year but also for the coming year, which means that as far as policy is concerned, it will become a bit difficult for the RBI, for us to think that the RBI would be lowering rates in the next financial year. That seemed to be some kind of a remote possibility at one point of time, but with inflation being where it is, and the fact that we've also seen that global commodity prices could get impacted because of the China factor, crude oil started coming down, came towards 80, we're once again moving in the upper direction. Nothing scary, still in the 80–90 range. It would definitely mean that the RBI could open this could open the doors for another rate hike in case inflation remains above the 6% mark for any reason in the next financial year. So as long as we are in this RBI range of 5–5.6%, I think it would be a long pause. But in case it goes up, and that was some kind of an indication given in the commentary of the RBI, that there could also be a rate hike, further rate hike, but not immediately.
Passenger car sales accelerated by a good margin in January. According to figures released by the Automakers Association, SIAM, passenger vehicle sales rose 17% to 2.98 lakh units. Interestingly, both cars and utility vehicle segments contributed to the growth. Two-wheeler sales, which have been languishing due to lockdown and a rural slowdown, also rose 3.5% to 11.8 lakh units. The Renault-Nissan alliance is rebooting its operations in India. The companies have signed an MOU with the Tamil Nadu government to invest 5,300 crore rupees for a facility close to Chennai. The combine, which has been in the country for nearly 15 years, will launch 6 new vehicles, 3 each, which 2 of them are electric powered. The investments will create 2,000 new jobs at the Renault-Nissan R&D Center at Singaperum Koil.
Today, we are thrilled to announce our new long-term vision for the country, where we introduce 6 new models, including 2 battery electric vehicles, to be made at our plant in Chennai. This plant will become an international export hub. Number 2, increase activity and add new projects to our technical center, including digital and software development, creating up to 2,000 jobs at Mahindra World City.
That's all we have time for on the show. Thanks very much for tuning in and good night.